Hi, welcome back to the channel. Today I'd like us to discuss about the Vix, the volatility index, the Cboe. The Vix is the real-time index that represents the expectation of the strength of the market in the S&P 500, the price changes in S&P 500. The Vix, popularly known as the volatility index. Investors use the Vix to measure the fear, risk, and stress in the market, especially the S&P 500. In general, the Vix reading below 20 is perceived to be a period of relatively low risk in the market, but a reading above 20 shows an expectation of higher risk in the market, higher volatility in the market. Some investors tend to buy assets when the risk is higher. That is when the reading is above 20, 25, 30 and higher. Like yesterday, it was at 38 and the market was really down. So it is very tempting to think that when the Vix is above 30, you should buy the dip. Not in all cases, but you can argue that it usually works in that direction. Not in all cases. See the ticker, the Vix, VIX. You will often see, in fact, mostly see Cboe, Chicago Board Option Exchange. That's the full meaning. Let's have a look at the chart to see where the Vix is today, 25th January 2022. We are looking at daily chart for the Vix. The Vix was up as high as 35 today, 35.85. You can imagine. Right now, the Vix is at 30.50. Now look at the Vix yesterday. The Vix went as far as high as 30, 38, 39 yesterday. That same yesterday, Dow Jones dropped about 1,200 points, which is about 3%. Nasdaq dropped about 3%, while S&P 500 dropped about 2%. That's yesterday. Now, today being 25th of January 2022, you could see that. Let me just go on a weekly chart for the Vix. I think you will be able to see more. The higher timeline you go, the better for the Vix. And let me just expand this. Good. Now we're looking at the Vix here. Yeah, for the month. For the week. So we're in a weekly chart now. The last time the Vix was as high as 84 was on the 16th of March 2020. That was the lockdown, the pandemic crash. Now let's look at. Imagine for those that bought stocks when the market was down, when the VIX was high, even the prices were as down at 60, 70% for some of the stocks. Then they actually made a lot of money. 2020 was actually good for stocks. For those who bought the dip, they made a lot of money. But you cannot say that every time the VIX is high, that the market has dropped, you should buy. In some cases, it doesn't work that way. Let's look at here. The VIX was 50 there, and that year was 5th of February 2018. Must be a crash there. I will check history to confirm that. The VIX went as high as 50. So obviously some people might have bought the dip then, or not. But it just means that, as it often believed, that the VIX and the S&P 500, the market goes against each other. When the VIX is high, S&P 500 will be down. I'm not saying in all cases. Now look at this period. These are relatively low risk period. Like I said earlier, Once the VIX is above 20, it is perceived to be risk. The fear is high in the market. And once the VIX is below 20, it's a period of, it is assumed to be relatively low risk. So we are looking at NASDAQ chart, NASDAQ on a weekly chart. Fantastic. That is very beautiful. Now, see where we are. The NASDAQ was in red earlier, still in red. It has went down as 13,052. If you check this with the VIX was as high as 38 then. Now I'm sure the VIX was some few minutes ago was around 30. So NASDAQ is going back up as well. So you see, it's interchangeable. VIX goes higher, the index goes down, the VIX come down, the index start going up. Let's look at S&P 500. The same lovely chart. Let me just draw this straight line. I love this. This is beautiful. This is what you want. You see? Yes. Now, the S&P 500, if you check with the VIX, earlier, the VIX was around 38 or so. Sorry, it was around 34 or so. It was coming down. The S&P 500 was actually down as well. It was about here in red. As the VIX was coming down, the S&P 500 going back up. See? So it's interchangeable. Let me expand this. Let's see. Fantastic. If you check this with the VIX, you'll see that this is 23rd of March 2020. If you check on the VIX, you would see that the VIX was very high then. So you see, this was what I said earlier. It looks tempting to say when the VIX was high as 50 or 60, you should buy the dip because the index will be down at that period. Now, let's have a look at the VIX again quickly. Let's have a look at the VIX. What's the VIX saying? Okay. Now, the VIX is 29. You see, the VIX has dropped to 29 from 34. Fantastic. You see, if you check this was in March 2020. You see, March 2020 it corresponds with the VIX. This is the period of relatively low risk. It's not really bad. It's not high. It's not really down. So you can see, and this period, you see this period, if you check it on S&P 500, you will see the same thing. See, the period of relatively calm is, and when the volatility is high, you expect that the S&P 500 would have dropped over 30 or 40% then. So you see, it's very tempting to say they work interchangeable. However, the most important thing is that as an investor, you need to put eye on the VIX, just as you put eye on the yield curve. Yield curve, it matters most. It's an economic barometer. This is an index barometer. You need it. You need it, guys. It's very essential. It's very important to know how to read the VIX. Once the VIX is above 20, it is perceived to be high risk. Once VIX is below 20, it is perceived to be a period of low risk, relatively calm. You see what I mean? We have seen the VIX. We have looked at the chart. It is up to you if you would pay attention to the VIX. But I will advise you pay attention to the VIX. It is very important, just as the yield curve. Thank you for watching this channel. Please like and share if you've gained any value from our video. We will continue to produce more content that will support and educate your investment journey. Thank you.